Can Apple even go any direction but up? I'm no Apple fanboy, but it's looking pretty bullish right now. Stay around and we'll talk about it. Hi, this is Tim from TradingStrategyGuides.com. Yep, I'm definitely no Apple fanboy. That's not to say that I dislike Apple. Being a musician, it's a bit difficult to avoid their products. Yes, I've got an iPad, but that and my wife's phone are the only Apples in our household. But just like my love of Tesla, I can't let that affect my trading, and Apple is looking pretty bullish right now. Today's a bank holiday in the US, but I wanted to get this video out so you guys can be ready for the week. I'll catch you up on the open trade. Yes, right now there's only one. Plus another quick look at Bitcoin. Then today's trading maxim. Grab a cup of coffee and let's hang out a few minutes. Remember, you can speed this video up by clicking the gear icon in the lower right of the video and selecting a new speed. Alright, let's talk about Dish Network for a minute. Well, Dish came within 20 cents of our target. Well, that's a terrible line. And then it dropped. I'm still holding this one slightly positive right now. As usual, we'll shut it down if we get a close back down below 32.92 here. As you may remember, I had a bull flag drawn on this Bitcoin right through there. And the more I looked at it, the less I liked it. I mean, beyond this point right here, it hasn't even attempted to get back down to the bottom of the channel. So I've changed the setup on Bitcoin to only include this descending triangle that I've had on there, like so, because of the strength of this level at 93.85. And as you can see, the volume and the volatility continue to drop on this, so expect a break sometime soon. And if you're uncomfortable trading with any of the crypto brokers, you could trade Bitcoin futures at the Chicago Mercantile Exchange, or CME. And the triangle break level here is 94.1350. I'm not going to go into a bunch of details about Apple Inc. I'm pretty sure that if you're a trader and you're watching this video, then you've probably heard of Apple. Suffice to say, they've been around since the beginning of the home and personal computer revolution in the mid-70s. And yes, I've been around that long and got my first computer then, and it wasn't an Apple. Having said that, I've worked with a lot of Apples over the years, and I think they got some pretty great products. I also don't think they would even exist today if they hadn't made the genius marketing move in the 80s of giving Apple computer labs to schools and giving free computers to teachers. They succeeded in raising a generation of kids who knew nothing but Apple computers. And as I said, as a musician or artist, it's impossible to rate the impact Apple has had in those areas, since they had some of the first really good software for creatives in the 80s and 90s. Apple trades on NASDAQ as AAPL and is a component of the NASDAQ 100, the Dow Jones, and both the S&P 500 and S&P 100 indexes. Here's the Apple chart with a sort of sloppy ascending triangle. I like this lower level right here where I've drawn the dotted line for the resistance line right at these highs right here and right here. But right here, after this earnings statement, it opened above the resistance level, was immediately beaten down over the next several days. Go figure. That's the reason why I don't like fundamentals. If you get a surprise positive earnings statement like this, wouldn't you expect the price to start going up? I mean, that just makes sense to me. Well, I'm sure fundamental analysts have some reason that explains this drop. I'm not being critical of fundy analysts. Wait, yes I am. Seriously, I really don't understand fundamental analysis, and if they can make it work for them, more power to them. I'm not going to be critical of people who are successful just because I don't understand their process. But I digress. During the course of this pattern, the volume and the volatility have been in a nice decline, both before and after that earnings statement. And you see all of this mess right in here is this move right there. So I like this on a daily close above this weird open level right here around 216.50. This is a really great example of sloppy support and resistance levels. I still think it's a really strong level, and I don't think it has any effect on our setup here. So here's the plan. We're going to buy a daily close above the triangle, or above 216.50-ish. On the breaking candle, to enter a full size position, I want to see this volume bar reach up to this volume average. If it doesn't reach the average, but does at least reach 75% of the average, I will take a half size position to reduce risk. You can calculate the percentage by dividing this volume number right here by this volume average right here, and you should get at least 0.75. If you don't get that, don't enter the trade. The stop loss will be 1.5 times the average true range, and the first target will be 1 times the average true range. So you're going to look at the ATR right here on the breaking candle and multiply that by 1.5 to get your stop loss, and of course you'll put your stop loss behind the entry. You'll measure it from the actual entry level, and you'll put your first target, 1 ATR, above the entry. If after entering the trade we get a candle close back inside the triangle or back below 216.50, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically I do this using 2 positions. The first position will have a hard stop loss and a hard take profit at the appropriate prices. The second position will have a hard stop loss and no take profit directly associated with it. And that's the setup on Apple today. Remember, I'm not trying to tell you what to do. I ain't your mama. I'm just telling you how I handle these trades. If you want more details about how I do it and what I do, look below this video for a link to my trade management video. If you've already got a great trade management plan that works for you, by all means use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology to find the best strategies for your own trading. And speaking of psychology, let's take a look at today's trading maxim. Now is a great time to talk about my trading maxims because they're part of how I control my personal trading psychology. A maxim is a general truth, fundamental principle, a rule of conduct, or just a proverbial saying. These maxims come from various sources, books, the internet, friends, coaches, teachers, others. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life like fitness. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure that you always do the right thing. Feel free to borrow from my list. Today, I've got a brand new trading maxim for you. Isn't that cool? You can never go wrong with Confucius, right? Tim's trading maxim number 58, our greatest glory is not in never falling, but in rising every time we fall. So, all my life I've heard the wisdom of Confucius. Confucius was a Chinese teacher and philosopher who lived from 551 to 479 BC. Scholars are apparently cautious of attributing specific assertions to Confucius himself, so who knows whether he actually said this or not. But the wisdom of this statement is pretty obvious, and I've said it lots of times. Never give up. Fall, get back up. Fall, get back up. And one of my problems has always been taking too much time to get back up. So that's something I'm personally working on right now. Remember the Apple trade plan here. We're going to buy a daily close above the ascending triangle around 216.50. If the volume is not quite average, go half size, as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video linked below for more details. And here you go. Free is great, isn't Sign up for my free Trading Picks email list to be sure you don't miss any of them. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll get to see them first. Plus, you'll get first notifications of anything special that's happening. And did I mention it's free? I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday and Friday for my analysis videos like this one, and Wednesday morning for training videos, which will most likely include a trade setup as well. I appreciate all the input I've been getting on videos. This week we're going to wrap up pattern recognition and we'll get to some other subjects. I would be happy if you guys would comment below on other subjects you'd like me to discuss, or questions you may have, or maybe you just want to tell me I'm ugly and my mama dresses me funny. Well, I am ugly, but my mama doesn't dress me anymore. I also want to mention that I'll be out of town for a few days in mid-September for my nephew's wedding. Somebody at Trading Strategy Guides will be filling in for me on a video or two, so that should be a lot of fun. Follow me on Twitter. Sometimes I post things there. I'll put my Twitter link below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have an awesome week. I'll see you next time.